Hello everyone and welcome back to the channel. Today we are diving into a topic that could literally transform your business, financials, health and how to maximize your profit with the new GST rates in India. If you are an entrepreneur, a small business owner or even manage the finances of a large enterprise, you know that navigating India's tax landscape, especially GST, can feel like a complex maze. But what if I told you that the latest GST rates changes aren't just another compliance headache, but actually a golden opportunity? An opportunity to save money, streamline operations, and most importantly, boost your bottom lines like never before. That's right. The recent adjustment by the GST Council are designed to bring significant benefits to various sectors, and understanding them is crucial to unlocking the advantage in this therefore in today's video we will guide you about all these things. We are going to break down everything you need to know. Let's kick things uh, Let us start with the foundation. Understanding the new GST structure. It is important to remember that GST, or the Goods and Services Tax, is a multi-stage destination-based consumption tax. Its primary goal when introduced was to simplify India's indirect tax regime, and while it has evolved, its core principle remains the same. The GST Council periodically reviews and revises rates on various goods and services. These revisions can be influenced by several factors, starting with the economic conditions to stimulate the demand or control inflation. Second is industry representations, which is feedback received from various sectors asking for relief. Number three is revenue collection, adjustment to ensure stability for state and central governments. Number four is the simplification, further refining these tax structures to reduce compliance burdens. So, what exactly has changed recently? Well, the specific rate changes frequently that change trends we have seen in recent major updates often involves. Number one is the rationalization of slabs, moving items from higher tax bracket to lower ones, especially for essential goods or services that have seen increased demand or part of the government initiatives. Number two is exemption and inclusions. Certain items might get exempted or new services might be brought under the GST net, usually at a lower rate initially. Number three is the clarification of HSN/SEC codes. Sometimes it's not the rate change but the clarifications which can indirectly affect the applicable tax rate. The key takeaway here is that these changes are generally aimed at two things: easing the burden on consumer for certain goods and services and providing boost to specific industry. And that's where your opportunity lies. Now that we have a basic understanding of what has shifted, let's move on to the exciting part: how these changes can directly translate into savings for your business. This is where the rubber meets the road. Understanding the new rate is one thing, leveraging them is another. Here are the practical strategies to identify and capitalize on the latest GST changes for tax saving. Strategy 1: Re-evaluate your input tax credit (ITC) claims. What has changed? If the GST rates on your raw material, components, or services used in your business have been reduced, your cost of acquisition might go down. What action you need to take now? Don't just assume your software handle everything. Regularly review the GST rates on all your purchases, input, capital goods, and input services. Ensure your vendors are charging you the correct updated GST. An overcharged GST, even if it claimed as ITC, means higher cash outflow initially. More importantly, if your output GST rate has decreased, you might end up with a higher accumulated ITC than before, which needs careful management to avoid blocking capital. Next is the strategy. That is the next strategy, number two. Optimize your supply chain and the vendor selection. What changes you need to make now? Different items or services in your supply chain might now fall under different GST slabs. So the action that you need to take now is understand, are your current vendors charging you optimally? Can you source similar quantity, quality, material or services from a vendor whose items are now fall under a lower GST bracket? Sometimes even a slight change in the description of services or goods can lead to different GST rates. Engage with your vendors and negotiate. Make sure their invoicing is updated as per the new rates. Now moving to the strategy number 3, that is review your product slash services classification, which is HSN slash SAC codes. What changes you need to make? Sometimes the government clarifies or reclassifies certain goods or services, so you need to basically look at those changes. Action: double check the HSN, which stands for Harmonized System of Nomenclature for goods, and SAC, which stands for Service Account Code for services you deal in. A misclassification could lead to paying higher GST unnecessarily, or worse, non-compliance penalties. Consult with a GST expert if you are unsure about the correct classification for any of your offerings, especially if they are niche or hybrid. Next, moving to strategy number 4, leverage exemptions or reverse charge mechanism, RCM. The changes which have happened this time is some items or the services might have moved into an exempt category, or there might be changes in the applicability of the reverse charge mechanism. Your action requires, if your business deals with newly exempted goods or services, ensure your billing reflects this correctly. For RCM, always stay updated. If a service you procure now falls under RCM, your recipient becomes liable to pay tax directly to the government, which can affect your cash flow. Even though ITC can often be claimed later, be aware of these nuances. Strategy number 5, analyze the impact on your cash flow. What has changed this time? Lower GST rates on your output means less tax collected from your customer and potentially less paid to the government. What action you need to take? This can be a double-edged sword. While it might make your product more attractive, ensure your ITC claims are robust to manage your cash flow effectively. If your ITC balance starts accumulating significantly, it means your capital is locked up. Explore options for faster ITC refunds if eligible and available for your sector. Regularly reconcile your GSTR 2A and 2B with your purchase register. These strategies aren't just technical or theoretical, they require active monitoring and quick adaptation. The businesses that stay agile and informed are the ones that will truly reap the benefit. Now let's look at how these rate change can be used strategically in your pricing decisions to boost sales and profit. Pricing is an art of science, and the new GST rates offer a fresh canvas. When GST rate changes, you have a critical decision to make. Do you pass the saving to your customers, absorb them, or strategically adjust? So what are the options? Starting with first, pass the savings to customer. That means reduce your MRP. And when do you want to do this? If the rate reduction is significant and you operate in a highly competitive market, this can increase sales volume, capture market share, and attract new customers. What are the benefits? Higher sales volume can lead to greater overall profit, even if the per unit profit margin is slightly smaller. It also fosters goodwill and perception of the value. Now, option number 2, absorb part or all of the savings. That means maintain current MRP. When you want to do this, if your profit margins are very thin, or if the rate reduction is absolutely minor and unlikely to significantly impact customer purchasing decisions. The benefit for this option is directly increase your per unit profit margins, boosting your bottom lines without needing to increase sales volume. This is a direct profit maximization strategy. Next is the third strategy, which is strategic pricing adjustment, which is the hybrid approach. And when you want to do this, this is often the most nuanced and effective. You might pass on some of the savings to customers and still remain competitive while absorbing the rest to improve your margins. What are the benefits? Balances increased sales volume with improved profitability, allows for flexibility in marketing and customer perception. So, key consideration for pricing is you have to look at the competitive landscape. You have to understand what your competitors are doing. If they pass on the savings, you might need to do that too. If they don't, you have more leeway. Uh, Number two point that you need to look at is the price elasticity of demand. How sensitive are your customers to pricing change? For high elastic products which demand a lot of change in with the prices, passing on saving can dramatically boost sales. For inelastic products, you might be able to absorb more savings. Next is the brand value. A premium brand uh, choose to maintain price and emphasis on quality, while the value driven brand might focus on passing the saving. Number four is the operational cost. While your other operational cost, which is raw material, labor, logistics, etc., also changed, the factor these into your net pricing decisions. Remember, the goal isn't just to react to GST change, but to strategically use them to your advantage. A well thought out pricing strategy can make the difference between merely surviving and truly thriving. Now let's zoom out a bit and look at how these rate change affect different sectors and what you should be mindful of. So GST rate change rarely operate in vacuum. They create a ripple effect across the economy, impacting various sectors differently. Understanding this broader context can help you articulate and anticipate market shifts and position your business strategically. Common beneficiaries of the rate reductions are the manufacturing sectors, often see relief on raw material or components, leading to lower production costs. This can make their products more competitive in the market. Next is the retail sector, which with lower GST on consumer goods can lead to increased purchasing power and higher sales volume, especially for discretionary spending. Number three is the hospitality and tourism, often receive specific rate cuts for services to boost these sectors, especially after economic downturn. Number four is construction and housing. Reduced GST on construction material can lower project costs, potentially making housing more affordable and stimulating demand. Last is the MSME, which is micro, small, and medium enterprise. The government often targets these businesses with simplified compliance or lower rates to encourage growth and employment. So there are a lot of potential challenges in the areas too, which is the accumulated ITC. Some sectors, especially those with the inverted duty structures where input GST is higher than the output GST, might see increased accumulation of ITC, tying up working capital. Then transition period. Any change creates a transition period with potential for confusion in invoicing, compliances, and accounting. By being proactive in updating your system and training your staff is going to help you. Then competitive pressures. If your competitors quickly adapt to the new rates and you don't, you might lose the market share. So there are certain actions that you can take to resolve this, starting with stay informed about your sector. And number two is monitor economic indicators. Keep an eye on consumer spending patterns, rates, overall economic growth. These broader trends will influence how effective the GST rates changes are in stimulating demand for your product or services. Next is network with peers. Talk to other business owners in your industry. Share insights and best practices on how they are adapting to the new GST rates. This can provide invaluable real world perspective. The landscape is always shifting, but with awareness and proactive planning, you can turn these shifts into stepping stones for your business growth. Now, before we wrap up, have a quick chat with your accountant or tax advisors to understand the specific implications for your business model. Start brainstorming pricing adjustments based on strategic alignment, as we have discussed before. The new GST rates are not just about compliance; they are a strategic lever. By understanding them and adapting intelligently, you can significantly enhance your business's profitability and competitive edge. So, friends, what are your thoughts on the new GST rates? Have you already seen an impact on your business? Share your experience and the questions in the comments below. And I love hearing from you and engaging in these discussions. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more valuable business insights, and hit that notification bell so that you don't miss our next upload. Thank you for joining us live, and you know, wishing you all the best for your success, and catch you again in the next one.